Hi. One of the best ways to make a lot of money in the market is to take it from those who panic. Because panicky people who act irrationally hand you valuable assets for pennies just to get out of them. Or, for those of you who like to sell short and know how to do it, they will buy from you what you own at vastly too high prices. Of course, to do this, you have to keep a cool head on your shoulders, which, however, is harder than most realize because panic infects everyone. You too. What's more, to keep cool when others are panicky may insult them, who see your cool as a reproach to them. But this you'll have to bear, but your money will console you. Now, why am I telling you this? Because panic often acts like a virus. But yes, apparently, a virus can also act like a panic. I'll get to that. First off, let me tell you about panics and the madness of crowds that spread like an infection that almost no one can resist. If you walk in the market long enough, you'll see enough moments of madness so that you can immediately identify what it feels like. I've seen many, and what I see today in the Wuhan virus panic feels very much like a regular, run-of-the-mill madness of crowds, and I've seen several. Let me get some chronology here. You see, I got my MBA in 1976, first went to work for a large conglomerate on Bay Street, buying and selling companies, but then getting itchy to buy and sell on my own, in 1979, I went to Bay Street, which is Canada's Wall Street. And I know that this chronology makes me 41-year veteran of the market. And let me tell you, have I seen market madnesses? I've seen plenty come and go. For example, in the early 1980s, when inflation went to 15% and interest rate went to 20%, the world went mad for gold and silver to protect its saving against inflation. So stocks were sold for a song and a half. Gold went from $200 an ounce to $800. So when I came one morning to the office, I saw a block-long lineup of people holding bags of cash before Dick Pereira, dealer in bullion, wishing to buy gold at no matter what price. This, of course, was peak gold for many years. And by the way, also the bottom of the stock market. That feeling of get me in, everyone together, wall-to-wall buyers, was a clear sign of market madness, a sort of mental virus that infects everyone, and no one is immune. And they all want to do the same thing at the same time, either buy or sell. Now, did I buy gold? No. At the time, I thought that stocks were more fun and cheaper too. And I also dared think I had an edge in stocks with the odd idea of doing physical research about them, what I called sleuthing. I wrote a book about it, which you are welcome to buy, not just getting data that everyone had. So this was one mania, the first gold mania. The next one I saw was in oil. A bunch of crazy economists thought that oil was limited in quantity on Earth. So there would be peak oil. So oil will go to $500 a barrel, maybe more. They even managed to convince the Canadian government to subsidize drilling the polar ice caps. I kid you not. Oil went from $70 to $100 a barrel, then crashed to $12. So this was the second mania I've seen. But then came the crash of October 87. I was by then director of research at a Canadian brokerage company. The days of August 87 were a madness of GMI, get me in at any price, before stocks go even higher. But then the euro dollar gave distress signals, and the TED spread, Google it to see what it is, rose alarmingly. So we thought it was a mini mania of crowds. So my department and I said the liquidity squeeze was coming, and the entire firm went liquid. So a month later, when the market did crash, we had lots of free capital to make market in stocks. And indeed, the day of the crash, a mania of GMO, get me out, we could buy good stocks at rock bottom prices, and we and our clients did all right. So these are two more manias, one of GMO and one of GMI, get me out and get me in. There have been others. The internet mania ended in 2000 NASDAQ crash, the marijuana stock mania. And of course, manias are not just exclusive to the last 100 years, nor indeed only to the market. 1929 was a famous mania of radio and railroad stocks before the crash of 29 that just came before the Depression. And much before that, there was a famous mania of tulip bulbs, where seemingly sane Dutchmen paid millions of guilders for bulbs of regular tulips. And then it all crashed. And then there was the South Sea Mississippi bubbles. That was called IPOs then. And also, of course, the money printing bubble in France of the revolution, 1789, of which I spoke last time. And now, yes, the virus, quarantine, and the money printing bubble? Because, as I hope you realize, this virus madness is very likely also a bubble, a mania. It has all the earmarks of one, all the irrational behavior of crowds, but also irrational behavior of governments and irrational response by both, in my opinion. And just as it was useless to tell investors in December 2019, 6 months ago, and 3 months ago, that the ratio of debt to GDP is highest ever, which was why Warren Buffett kept $100 billion in cash, so it was useless a month or two ago to tell panicky citizens that the rate of mortality of the Chinese flu was a fraction of the rate of death from regular flu. Flu death rate is about 1%, perhaps a shade less, while that of the Chinese flu perhaps 0.2%. Of course, any death is tragic, so we all have to do the best we can to avoid it. But so are the deaths from regular flu and cancer and heart attacks. But somehow, the panic due to the death of some Wuhan flu sufferers caused an irrational reaction on the part of governments. The Chinese government was the first, and they closed the world's economies, printed huge amounts of fake money, and threatened to arrest anyone who didn't panic alongside and hide at home. The virus of panic had been with us forever, because in matter of life and death, especially, if you read any of the old historians, they tell us of panic spreading through battlefields for no apparent reason. One moment, everyone is fighting in line, brave and resolute, just like the economy. Suddenly, one wing wobbles, and there's a rumor the commander fell or was wounded. Someone shouts that the enemy broke in, and then, like brush fire, panic sweeps the field and is everyone to himself, a rout. Such panics are like a virus infecting a crowd's mind, and so I believe is the panic now infecting citizens and the market and many governments and central banks. So no rational statistics and argument can help allay it. And now, with all this money mountain printed and the debt taken on, we just have to go through with it and ride it to the bottom. We can't avoid it. What you can avoid, however, is the panic. You can, however, keep your wits about you, knowing the world will not end. The world will survive. And then, as people awaken sheepishly from the hysteria, as they did after the tulip bulbs, and as they did after the crash of 87 and the crash of 09, you can end up with shares in your hand that cost you pennies, which many of the GMO crowd sold you in a panic. And you could then, the morning after, sell them to all those GMIs that get me in who want them for dollars. But buy what and when? Why? Buy that which everyone is selling at a panic. And what more panic is selling now than oil? For example, look at Canadian oil companies. For the last 6 months, there has been a relentless, ongoing wave of insiders in oil companies buying their oil stocks. Some bought by Canadian insiders at $3, then they fell to $2, they bought more, then they fell to $1, they bought more, and then they bought recently at as low as, say, 50 cents. And why? Because no one will ever use oil again? And the world is surely ending? And besides, there's too much oil anyway? No? Well, no. Oil price avalanche that caused the price to go idiotic, minus 40, was caused by know-nothing retail so-called investors who only invest via the internet, for whom the real world is blips. Those who really know the companies, the oil itself, that is the executives, the directors, the VPs, they kept buying and buying and buying for hundreds of thousands of dollars each, often for millions, more and more and more. They think it's a good deal. Who do you think is right? Them or those who paid minus 40 to sell their oil contracts? Now, why do I think oil does have value? Because someone in the future will still drive cars again. Sometime in the future, economy will be restarted again. And once we'll have a war again, there'll be one sooner or later. And there'll be need for oil for tanks and airplanes and generators. Armies don't run on Teslas yet, you know. And if the Middle East will be on turmoil, it usually is. Why? There's this lovely Canadian safe oil that is safe in the ground here. And the people who run the oil companies are honest Canadians. They rarely cheat. And they even speak a language similar to American. In other words, Canadian oil companies' sale of today is, in my opinion, a madness of crowds. Just as the Wuhan flu panic is, in my opinion, both in China and in the rest of the world. Death rate is 1/5 of that of flu, panic 50 times higher. Now, which oil stock should you look at? Well, remember, these words of mine are not recommendations, only speculations. So my speculation is that a bunch of good Canadian oil stocks today, with good balance sheet and good resource underground, held over 3 or 4 years, may one day sell for more, perhaps much more, when oil, by then a rare commodity with no one drilling today, may again sell for, shall we say, between $50 and $100 a barrel. Now, which stocks? As I said, I'm not your broker. If you have one, call her. Meantime, remember that the universal panic is hard to resist. But if you can resist it, whether oil sell-off or the Wuhan virus panic, you can often take the money of those who can't resist. That's all for today. Please let me know what you think about it in the comment below. Give it a like, subscribe to it, and tell your friends what they can subscribe to. See you next time, and thank you meantime very much for watching.